Good morning, everybody. Hey, welcome to April 30th, the last day of April. Can you believe it? We have been through 4 months this year, heading into the fifth. Crazy to think that that's really and truly where we are right now. Hey, as we get started today, we've got jobs coming up. We've got some other stuff coming up. Excited about some of those things that we're looking forward to. And we'll have a lot of discussion there when it comes to those type of things when Dave gets on. So, but looking forward to that. But a lot of good information today. A lot of earnings coming out. A few unexpected that we'll talk about here in just a minute. But I hope you'll stay with us for the whole show today as we get ready to talk to Dave.
0.7 high light. Good morning. It's 8:40 now, 20 before 9. Time to check out on money and find out how Wall Street's doing this morning. We always talk to Phillip Statler, head of Statler Financial Services in downtown Sebring, to get the low-down to skinny and the up-to-the-second information. Phillip, good morning. How are you today?
Good morning, Dave. Hey, doing well today, other than it being a cloudy, rainy day. But other than that, yesterday was kind of a barn burner day, man. What a green upward movement market we saw yesterday.
Yeah, and you mean the more bad news we get, the more the markets seem to go up. Dow up 532 points, NASDAQ up 307, and the Standard & Poor's up 76. Boy, you'd almost think happy days were here again. And with good news from Pfizer saying they're almost ready for an emergency release on that vaccine, there's going to be some upward pressure today if we didn't have all the economic news. And we talk about drip, drip, drip. This wasn't a drip. This was a bucket load of water dumped on us today. Start out with the first-time unemployment claims, 3.8 million more first-time claims. That brings us up to 30 million total since the coronavirus crisis began.
Exactly. And if you round that number to the full extent, it was a little more than 3.8 million new job losses, unemployment claims. And that's more than what we expected. Depending upon the analysts you look at, we were at somewhere between 3.4 and 3.5 million was the expected first-time claims. And so that 3.84 million, that's more. And let me tell you, the markets did not like that, Dave.
No, they're starting to look for some good news out of the economy instead, and we haven't been getting any, and they've been ignoring it for the most part. But tonight they seem to be paying attention to it. The other data that came out of the government data dump this morning, also not good news. Not a surprise, I guess, that personal incomes fell during March. If we threw that many people out of work, you got to assume that personal income on average was down, and it was down by 2% last month, which also was a little more than they expected, but not by much, right?
Yeah, right. Not by much at all. They expected personal income to be down about 1.9%. So, that's to me, that's a wash. That's not big enough to make a big deal of. But Dave, personal spending,
yep.
Now that's another story. Now, what did it? I don't have the actual reported number right here in front of me. I know it was 7 something.
It was 7.5% down in March, which was considerably worse than our analysts expected.
Yeah, we expected 5.3% decline in personal spending. So to me, you combine that with the higher than expected first-time claims, and the markets did not like those things at all. I mean, we were green when I first looked at the market this morning, Dave, and we have quickly reversed that to significantly red numbers.
Understood. Yeah, the other thing that hit me out of the report for numbers that I got was the savings rate, which kind of explains the consumer spending decrease. Savings rate in this country went up by 13% last month, which indicates the consumers out there are really nervous and they're socking away with little extra money they've got, trying to make sure that rainy day fund is available, which is good financial planning for the family. But in a country that's as driven by consumer spending as we are, seeing the savings rate go up when we're pouring checks out of the federal government for stimulus purposes, this is one of the rare times saving isn't necessarily something we wanted to see.
Well, that's true, but I think but it's prudent, right? I mean, people
Yeah.
have fear that they may not have a job next week or next month, and so if they do have a job right now, they are putting money aside just in case because they don't want to get caught short. And so, from a prudent standpoint, I think it's probably smart what they're doing.
Oh
Um,
yeah. You and
and
me together
let's face it,
individually. I'm sorry. Individually, I was going to say it's a good idea for our families, for the macro function in the economy, not what we had in mind, right?
exactly. But the other side of that, Dave, is where do you spend money, right? I mean, everything's closed, so if you got a job, where do you spend it at? You almost have to save it.
That's true. With the states opening up, there may be a pent-up demand indication that we'll see a big bounce upward in April. We can always cross our fingers anyway. A whole pile of reports. One of my tip sheets said this is the single biggest earnings day of the season. So let's dive right into it. And the biggest shock of the bunch is getting reports about Ford and GM can't give their cars away. Who ends up with a profit? Tesla. What's going on?
I'm not sure how they did it, but the numbers are the numbers, and they had a significant profit, Dave. They were expected to lose like 22 cents a share, and they actually made a profit of $1.24 a share. I mean, that's $1.46 swing in net income, net profit. So I'm not sure how they did it or what they did, but I tell you, people are ecstatic that they were able to pull that off and make that kind of return. They're up 6.8%. I would think they'd be on your big winners list if Tesla's on there at all.
And that doesn't follow Tesla for some reason, but that I just look at it in absolute dollars. Tesla made more money than Ford. Huh?
Oh, easy. Absolutely. But you're right. We do have a slew of earnings, starting with Twitter. They beat by 11 cents a share. Their revenue was okay. It beat forecast by a little bit. They're being able to monetize their daily active users, which is one of the key metrics that they look at for them. They did not give any guidance for the current quarter or the full year due to all the uncertainty out there. And I got to think that that's what's hurting them this morning because they're down almost 5% before the market opens up. It's definitely not on the past quarter. It's that there's no guidance on this quarter to know what we're looking at and what they think they're going to be doing from that standpoint.
I would think with all the stay-at-home, even without guidance, social networking in general would be a growth industry right now, wouldn't you?
I would think so because people
Yeah.
don't have much else to do. But talking about, Twitter, social media, let's look at Facebook, the other social media site that I've got here. Um, they missed by 4 cents a share. Their earnings were ahead of what was projected. They've seen some stabilization in their earnings here, this sales revenue the last few weeks. So you would think that given what we saw in Twitter, that Facebook would be red, but it's
Mm-hmm.
not, Dave. It's actually up a little over 7% this morning.
And they ought to send their fact checkers after their balance sheets, right?
Yeah, exactly. I'm not sure what the deal is there. Um, we go, so that's all the social media guys we've got. Let's go back up here to Comcast, the TV industry, sports. They cover a lot of sports. They did beat estimates by 3 cents a share. Revenue, though, was below forecast. The company was, now this number is pretty good. They added 477,000 new high-speed internet customers during the quarter.
Wow.
They said that's the most in 12 years.
That's amazing.
Yeah, it really is. Now, of course, ESPN and their sports networks, they're suffering big time because there's no activities to be actually reporting on right now. So they're getting hurt on that front. They're down about 1.3% this morning.
Okay, you can't live on internet alone. Besides, that doesn't bode well for their network properties. Let's see, once the sports even begin, if everybody's buying high-speed internet and streaming Netflix,
It's going to hurt their cable business, isn't it?
Down the line, that's probably not good news, but it's a heck of a growth rate for one quarter, isn't it?
Yeah, it definitely is. All right, so let's turn our face and look at restaurants. What is the
Yes.
food industry doing? We got several of those today. We got McDonald's. They missed by 10 cents a share. Revenue though did beat the forecast. I guess before coronavirus hit, they had a really good first part of the quarter. But like everybody else, they've had to close their dining rooms, just go through drive-through, and because of that, it's put a pretty big decline in the last part of that quarter, and then this quarter, they're down 1.6% this morning. We go to Dunkin' Donuts, which you would think they'd be okay, right? Because everybody pretty much drives through, pick up a donut and coffee.
Stereotypically, I'd expect that to be a growth stock right now. Yeah.
And they did do pretty well, Dave. They beat by 5 cents a share. Revenue topped the forecast, but sales fell during the coronavirus outbreak. Because I'm guessing probably because people had to stay at home, right? I mean, even less people were out to buy coffee and donuts. So,
you think about it, a donut run is something you do en route to someplace else. So consequently, I'd imagine traffic was down, even though the stereotype fits.
Exactly. And so same store sales were down 19% the final 3 weeks of the quarter.
Ouch.
And then and here's what's hurting them probably more than anything. They suspended their dividend and withdrew their 2020 outlook. So they're down a little over 2.5% this morning.
I would have expected more. That's kind of the trifecta of bad news, isn't it?
It is. So let's look at the really bad one I have on the market today. Tapestry, which is formerly known as Coach, the clothing, and they make all kinds of stuff. But
they're the high-end purse manufacturer.
There you go.
Yeah.
They lost 27 cents a share, 15 cents more than what was expected. Yeah. Revenue though was more than forecasted. So not sure, how that really worked out for them, but they withdrew their full year forecast, which you expect that at this point. They've been, they were forced like everybody else to close their stores. They also suspended their dividend and their repurchase plan. Well, they made some improvement, Dave. They're only down 3.25% right now. They were down, when I first looked, they were down over 8% this morning.
I was showing them close to 9 in my delayed quote, so I was expecting the really bad news. So they're actually
they've made some improvements.
I hear you. One more, and then we'll set the table.
All right, so let's go to Microsoft. They beat earnings by 14 cents a share. Revenue beat the forecast. Microsoft said, hey, you know what? This COVID-19 thing, it's had a very minimal impact on their revenue. Matter of fact, they saw an increase in business because of their cloud-based segment. People using Teams and some of those things. The school system here is using Microsoft to do those type of things. So they got actual benefit from some of that stuff. And so they're up a little over 1% this morning.
Cool. Well, besides, they're Windows. They're used to viruses. Resetting the table before I get into real trouble here. Up yesterday, over 2% on all of the major indexes. 45 minutes before we opened this morning, it looks like a whole new world, Phillip. What is it doing now?
We're going to give back some of that. Not all of it. We're going to give back some of it right now. The Dow is down almost 0.9%. The S&P 500 is down almost 0.8. NASDAQ's doing about the best. They're down about 0.2% right now. So everything's coming up red this morning, the exact opposite of yesterday. We've got silver down 1.25%, back below $15 an ounce. We've got gold up 0.1%. Crude oil is making a comeback, if you can call it that, Dave, up 13%, up to $17.40 a barrel.
I think that's about where it was yesterday morning. So it was a herky-jerky day yesterday in the crude oil market, I gather.
Yeah, one of the headlines I saw was oil producers are trying to find anywhere and everywhere to put their oil.
Now put up the call. Mason jars, ladies. Stop canning vegetables and sell it to the oil companies. They need the storage space. Overseas markets, everything was green in Asia this morning at the close. We're showing a downward trend in Europe, probably following our futures and economic reports this morning. Phillip, advice is always needed to stabilize and figure out what's going on. Way up yesterday, could be way down today, but it's definitely not growing so far. How do I make contact with you to get that advice?
Dave, now's a great opportunity to reevaluate folks' portfolio to make sure that they're comfortable with the amount of risk and to make sure that there's not another leg down coming, to make sure they're properly prepared for that. Give us a call at 863-382-0037. That's 863-382-0037. Hey, follow us on Facebook, Statler Financial Services, and then join us every weekend for the Statler Financial Radio Show, 6 a.m. and noon on Saturdays, 10 a.m. Sunday mornings on News Talk 730 a.m.
All righty, streaming it too at newstalk730am.com. Phillip, thank you so much. We'll look for good news tomorrow morning, all right?
All right, man, you have a great day.
Thank you much. It's 105.7 Light FM and Statler Financial Services, Phillip Statler. Remember that.
Hey, everybody, I really and truly thank you. Charlie and I thank you for joining us today. I hope your day is off to a great start, and I hope you're excited about some of the things that are coming in terms of opening up the economy a little bit. At least we can start to get started on getting out there and seeing some people. So, hey, take care. Until tomorrow, have a great day.